Welcome to the Crypto and Blockchain Talk.
Hello.
Hey.
Guten Tag.
Aloha.
Hola. Shalom.
Hello.
Namaste.
Ni hao.
Privet.
Hello.
Salut. Yassas.
Salve.
Ciao.
Bonjour. Our podcast talks about the latest trends in the worlds of cryptocurrencies and the blockchain. Hello, everyone, and welcome to Crypto and Blockchain Talk. And this week with me, I have none other than Aaron Kaplan, who is the co-founder and CEO of Prometheum. So in the first instance, let's welcome Aaron to Crypto and Blockchain Talk. Hello, Aaron.
Hi, Aviva. Thank you for having me.
Boy, you sound super enthusiastic. Oh, what a great
You got to
start.
start strong.
Well, it's Friday, so I'll put it down to that. That's had a really hard slog today, and, you just can't wait for the weekend to start. Before we go into what Prometheum does and everything that's going on around your company, I did a little bit of background research, and I started to get a little confused because there's more than one Prometheum in the space. I'm going to start with asking, especially because we're also going to go into your background, okay, Aaron? And I know you're a lawyer or a solicitor, as we would say in the United Kingdom, but there's more than one Prometheum. So, guys going to launch a lawsuit? Or what? It looks like you're the older Prometheum. What's going to happen there?
So I wasn't familiar with someone else exactly named Prometheum. There's another company, I think, that was named Prometheus. I think it was spelled. I wasn't sure there was another exact one. I guess the best Prometheum will prevail.
It's the battle of the Prometheums. Okay, well, what I will say is that the Prometheum that we are speaking to today, the URL for your website is prometheum.com, and that's P-R-O, Metheum, M-E-T-H-E-U-M.com. So your website, it obviously talks about bringing blockchain securities to the world. And of course, for the longest time, there's been this debate on security versus utility and what that all means. And if you're a regular to our podcasting channel, you know that we cover this whole debate, the whole education of the world of security versus utility in terms of coins and tokens. We just did a podcast called Ethereum 2.0. Is it going to be a security or not? Let's first talk about you before we talk about your project, because people who listen to this podcast series, they want to know who I'm speaking to before they listen to really anything else we realize. So I know from looking at the team page, it's no coincidence that you have the same last name as half of the team. So I then looked a little bit further, and it seems to be that you come from a herd, a herd of lawyers in New York, and they are the most ferocious people on the planet. So what's going on there, and are you still a practicing lawyer?
Yeah, so essentially, my father started a securities law firm approximately 50 years ago on Wall Street. It's called Kaplan, and it focuses preeminently on molecular securities issues. Talking about SEC and FINRA-related matters, talking about broker-dealer, clearing firm-related matters, really molecular securities matters.
So what do you mean by molecular security issues?
So I would talk about the creation of broker-dealers, day-to-day broker-dealer operations, the implications of the federal securities laws in those operations, both on the broker-dealer and the clearing firm side. You have SEC and FINRA-related arbitration and litigation. And essentially parsing through the tough matters when it comes to questions of the federal securities laws and how they should be applied and the impact on the potential client when it relates to that.
So your father, when this whole crypto thing came along, he must have been rubbing his hands together going, this is going to be a wholly unmitigated mess. I'm going to have a brand new arm to my firm in about 5 minutes because it's going to be a mess. Did he think that to himself?
We didn't really look at it from the potential for legal work side. We always focused more on the business side. So actually in April 2014, we wrote a no action letter to the SEC requesting them to not take action against us if we traded virtual currency through an ATS and a brokerage account. And that was how we got into the space. And the idea is that the brokerage infrastructure and the federal securities laws provides the best framework for investor protection, full disclosure and fair and orderly markets. And if you look what's happened with some of the crypto markets around the world, I would argue that they're not fair and orderly and that there's been some shenanigans that go on there. And basically using the federal securities laws as a framework is probably the best procedure going forward for sort of exchanges and for any sort of market center that wants to have those three things, with full disclosure, investor protection, and fair and orderly markets. So that was the initial idea. But what ended up happening at the time is that the SEC, they really were just getting a grip on virtual currency. It was at the time where you just have Coinbase starting. They're operating under the Money Service Bureau and Money Transmitter licensure. And essentially, we thought we would provide an alternative approach for that. But we sort of got bedbugged by the SEC. But that's how we initially got into the space. And from there, I actually focused my practice from 2013 on the application of distributed ledger technology to the securities industry and the regulatory issues. And just to answer a question from before, I don't practice law. I previously practiced law, but we work full-time at Prometheum. There's an immense amount of work. It's a very complicated and sophisticated regulatory implicated business, and there's no time to do anything else, obviously.
I was wondering that. Let's go into now exactly what you're doing, it seems like, is allowing for companies who are entering into the crypto space to be able to offer their cryptocurrencies as securities to both institutional and retail investors. Am I correct about that?
Sort of. When we started Prometheum, it was right after the Dow report came out in July 2017. Mm-hmm. And that was really the first SEC comment on the implication and application of the federal securities laws to the virtual currency and blockchain industry. And what it says is that basically, depending on the facts and circumstances, essentially the federal securities laws could be implicated in the life cycle of a digital asset. If you cut through the legalese, what it was saying was that essentially almost all token-related activities implicate the federal securities laws. So from there, what ended up happening is that we realized that we had the horses and the ability to start Prometheum. And initially, Prometheum was meant to be an ecosystem for digital assets. And at the time, it was right after the ICO boom. And essentially, we wanted to create a compliant ecosystem, basically, that allowed us to service the full life cycle of a digital asset, from mm-hmm. issuance to trading through clearance, settlement, and custody. Mm-hmm. But what's happened since then, it's sort of changed. There's two components to the business. There's the one you've mentioned, not necessarily for virtual currencies, but more for digital assets. I would say like Howey tokens and utility tokens, as opposed to what are called pure virtual currencies, the Ether, the Bitcoin Cash. But the other side of the business, and I think this is a massive opportunity as well, is really the implementation of distributed ledger technology and distributed architectures in the capital market infrastructure. Basically, if you integrate the benefits of blockchain technology into the actual capital market, into the securities process, you just build a better apple cart because essentially you have a better basis for record keeping, you have less points of friction, you have better processes for clearance and settlement, you have instantaneous settlement almost, you have all these benefits here, and I could go much more deeper into it. But essentially, I think there's also a massive opportunity in the sense you'll see traditional securities also migrate to a blockchain. There's no reason it shouldn't. As long as the infrastructure is compliant, it's an upgrade from the existing market infrastructure. Markets work right now, but markets will work better when they operate on blockchains. It's pretty apparent to me.
Absolutely. As you know, and you mentioned this yourself, when this whole space, especially in that run-up of 16 and 17, because you have a lot of quote-unquote blockchain projects that go out there and they do promote themselves as blockchain projects, and it turns out they either have no blockchain or they have no project. Or both. So
according to almost every project, every point. No, the reality was few people had a blockchain. They had a project, they had an idea, they had a business, but they didn't have the actual underlying technology done to deploy their token or to distribute it. And I would also argue that even from the ICO days, there's still a lot of blockchains who haven't proven out their use case based on people investing in those tokens. And sometimes what you see is that actually when those networks go live and the token starts to see value, people start to realize that the utility value is much less than the actual speculative value on the open market. And it's not necessarily always good for those systems when they go live and actually use their token in their ecosystem. It often reduces the value of their token, but it's obviously their business plan is.
Your company then right now, according to what your website says, you're targeting everyone. You're targeting investors, traders, broker-dealers. I mean, you've got everyone under the sun listed here. The only thing you don't have listed is my mom and my cat. So
I could send her an email.
She'd love it. Who then is the target market for using your platform?
Sure. So the target market for using our platform is the retail public who have brokerage accounts. The idea of Prometheum is we've built our system with federal securities law compliance across the board, and we've built it such that it can easily integrate into existing Wall Street. And the idea is there's something called a fix engine. It's a financial information exchange protocol. It's basically language that different brokerage firms and clearing firms use to communicate on the backside. And what we've built with our fix engine is basically the methodology by which third-party broker-dealers can tie directly into our alternative trading system and basically allow their clients to invest in digital assets existing brokerage account. I think that there's an immense amount of pent-up buying power with people who have brokerage accounts, particularly in the baby boomer generation, who want access to digital assets. They want access to digital assets, wealth management products, and all these other products, but we will give them the ability to have that access. And one thing that really distinguishes us is that our ATS is going to be a public market ATS. What currently exists in the United States is private share markets. And there's a major distinction there as to who can participate in the type of assets you can list. So the way to think about it is we're really the generation after that private share market.
Okay, so another thing I'm going to ask you to talk about for a moment is you're using the acronym ATS for Alternative Trading System. Can you explain to the listeners what an ATS is?
Sure. An ATS allows for a lot of the same functionality of an exchange, except it's not its own self-regulatory organization. So basically you have to have, if you're a public ATS, you have to have the pre-trade, the post-trade, the risk management. You can't use the term exchange because it's an actual legal term of art. That's why NYSE and NASDAQ can say they're exchanges. But an ATS is sort of initial pathway towards an exchange where you have a lot of the same functionality. A good example of this is NASDAQ started out as an ATS, and then they became an exchange.
So I guess the natural question to ask based on your explanation of an ATS is, are you hoping to become an exchange when you grow up?
Honestly, that would be a wonderful thing. Again, from a business standpoint, from an economic standpoint, to go full exchange from the beginning, it doesn't necessarily make sense. You got to figure there's an additional $5 to $10 million in cost there. And the key is as your system's growing and more people are dinging on your system, then you move to become an exchange. The other thing is from a regulatory perspective, and we anticipate really in the very near future to be the first public market ATS in the United States. But the reality is if someone wanted to become an exchange, it's like jumping 4 steps above being a public ATS. And there's not even one public ATS in the United States. So our whole approach with regulators has always been crawl, walk, run. And basically, if you look at regulation itself, regulation's evolutionary. It's not revolutionary. So the whole approach to getting to be the first public market ATS and hopefully in the future potentially being an exchange is to start how we did and become the ATS first.
You know, I'm sitting here laughing to myself because I like your approach of the crawl, walk, run as opposed to the Facebook DM run, trip, crawl.
How many of the hundreds of licenses do they have that they need?
Oh my God. We could have a full podcast on that alone. It just makes me chuckle. I've seen a press release that I don't know who issued on your behalf that you've already raised 12 million plus from different groups, including Wangsheng Labs, who are an early backer of Ethereum. You also have HashKey, who are partners to you, and they invest and accelerate also blockchain startups. So are you also there looking for blockchain startups to join your platform so that you can not only turn their crypto into securities for then the public at large to invest in, or is it something where you're just looking for more established projects, or where are you getting whose tokens are you representing?
Sure. Obviously, Wangsheng and HashKey have extensive relationships in mainland China and in Hong Kong in general. And basically, they have a nice pipeline of potential issuers that as they mature could potentially list on the platform. From us, on terms of what assets how are we going to get assets to list, I really see it from 3 different avenues. I see one from existing digital assets that are out there. I would argue that there's minimum tokens that could be listed as existing digital assets. Just so we have a reference point, when the CBOE started, the Chicago Board of Option Exchange, I think it traded 1 option for 4 hours a day. So again, the crawl, walk, run approach here. Beyond that, the other side is we'll do initial issuances ourselves. And the idea for Prometheum, like I said, I sort of mentioned before, is we're not trying to replace Wall Street. Our idea is to be collaborative and let people tie into the ecosystem. I mean, with relationships with investment banks on the issuance side, with relationships with other brokerage firms on the ATS side. And basically, the idea there is to let them participate and in this digital asset universe as well. So that's a second source of potential listing for us. This is these new initial issuances. And finally, the third, I think there's massive opportunity for origination of different ETFs, ETP, structured products that can exist on chain. And basically, I think that when you look at ETFs particularly, there's really an interesting advantage by using a smart contract to basically govern the ETF, in that you can actually lock up the underlying tokens in the smart contract before you issue the derivative token, meaning the actual token representing the ETF. And you could prove that the underlying tokens are there because it's all in the smart contract. Mm-hmm. So there's certain advantages, like technical advantages and other advantages as well, in actually using our distributed architecture to actually issue and originate these products as well.
So what blockchain are you working off of? What are you creating yourself in-house?
We leveraged the substrate technology and then customized it ourselves. So we felt this substrate provided the most flexible framework as to how we would mature and how our blockchain would mature. So we chose that as the framework which to build on top of.
So Gary Gensler, as we know, has just pretty much joined on to the SEC. He's the new chairman. And he's actually said that he wants to make one of the priorities the improving investor protection and regulating crypto exchanges. And he said during a hearing before the Financial Services and General Government Subcommittee of the House of Representatives, that's a mouthful, he basically said that there was going to be a new regulatory category for digital assets. And he was also saying that the size of the industry made it very challenging for him to create sufficient consumer protections. And the other thing to kind of take into play from all this is that regardless of all these crypto projects that are out there, and like you said before, tongue-in-cheek, there's a host of projects out that deserve scrutiny, but regardless of all that, there's only ever been 75 actions that were brought forward by the SEC. So are you laying out a roadmap in terms of Prometheum, keeping one eye on what the SEC is asking for and one eye on your project? Are you constantly looking at how you're going to fall into step with what they're asking?
I think the SEC has pretty much laid out certain things pretty clearly. I believe that you have the step process, which is laid out in the release that came out around September last year,
right,
as to how ATS would have a relationship with the custodian and the responsibilities there. Obviously, that's very important for what people are doing on the ATS side because it's the procedures you have to follow in order to get licensed. So that's why that's important. And then you have, on the other side, you had the release that was in December 23rd, what they call the Christmas release, I think, that was basically the special purpose broker-dealer release. I think that there might be more determinations that need to be made on the regulatory side before anyone gets clarification there. So you have both sides of the coin there. One, you have a clear indication of how you have to proceed with sort of the three-step process release that happened September last year. And then with the special purpose broker-dealer release, which is very important for the industry. Essentially, it lays out the equivalent of the clearing function on the digital asset side. And it also says that existing clearing firms cannot custody digital assets. So they'd have to have a relationship. It's an important release. And obviously, we can't do anything until there's regulatory clarity in certain areas. Mm-hmm. But there are a lot of areas where there is that regulatory clarity. And obviously, we try to work and be in contact with the regulators of choice, whether it's FINRA or the SEC, on a constant basis to try to get clarification of points. And if there is no clarification, maybe try to help provide some sort of, thoughts as to how it could be clarified. You could also view it positively in that it gives you the ability to impact how these rules are going to proceed and how the actual entities and organizations that govern this space are going to work. So it's really an interesting space in that capacity.
And you're right. I don't think you could even try to follow a roadmap based on what's happening right now because, don't forget, that was Ripple's defense, that they claimed that because of they weren't given any notices and they didn't see any other enforcements really coming against them, or there were no enforcements that were being done that looked like that they impacted their space within the whole crypto sphere. They argued that the SEC was not really in the right space to actually level against Ripple, that they were actually breaking the law and bringing to the crypto world what they're now trying to say is now a security, which of course Ripple has been saying is a utility coin. It's hard, I think, for the SEC in terms of, we'll just talk about Ripple for a second. We just mentioned them, but I think it's going to be hard for the SEC to take enforcement action because I think Ripple are going to go off with it for a number of reasons. First of all, because they've been alluded to for the longest time by almost every branch in the federal government that has to do with financial enforcement, they've always been alluded to as being a utility token. It's never been anything but that I can see. But the other thing is that they've never had any kind of notices that, this is Ripple again, that their conduct was unlawful. So it's kind of a little bit strange. But of course, I know what you're going to say as a lawyer.
Yeah, that argument doesn't work because it's like
okay, go
it's a
on.
Section 5 violation of the securities laws. When you have a Section 5 violation, it basically means it's like the equivalent of strict liability. Essentially, you did a unregistered, non-exempt securities offering, which makes it an illegal offering. So if you just do it, it doesn't mean you have the intent for it to be legal, or you had some sort of. You don't have to have malice. You don't have to have thoughts, premeditation. You just have to do it. And the SEC has the window in terms of the statute of limitations on when it could bring the action. I don't think the argument that, we never got any indication from the SEC is legitimate. And if you've read the complaint, I mean, that's an interesting complaint when you look at the details.
So wait a minute. So are you saying that they were still within these limits of statute of limitations, considering, how long Ripple's been on the market, and also considering that when Ethereum actually first came onto the market, they were a security, and now they've gone, they went from security to utility, and now possibly back to security again. So how do you rationalize all that?
Sure. So the statute of limitation tolls every time they do a new distribution. Every time they were issuing more Ripple tokens, it's another violation. So it starts the statute of limitation again. If there was one violation, there was more after that because they did additional distributions. So I don't think the statute of limitation argument is valid in this capacity. XRP is arguably the strongest candidate for security out of any of the initial and early token offerings.
Oh, that's interesting. So are XRP going to be offered on your platform anytime soon?
No, you're bringing up an interesting point. So you have certain tokens that are arguably securities and are very much arguably not virtual currencies. And the question would be can you list them if they're security? If they're security, in theory, you can list them. But the issue is when you have the dirty laundry and all the difficulty on the regulatory side, I think you might be stepping on a landmine. I mean, I think that an interesting example is look at Polkadot.
Yeah.
Polkadot did not do a distribution in the United States because they did not want to implicate the federal securities. There's some council that Coinbase has evolved and that essentially does a determination of how likely something is to be a security, and they got the highest determination. So I think Polkadot is best use cases. It's an excellent company. I think they're really intelligent, and I think they're going to be significant players in the future of the space. And I think they would be a wonderful candidate to list. The question is there's certain weird things going on there. So basically, they're security, they want to be in a security, but now if they're in the United States, they were never registered. So how would you trade it publicly? So there's certain issues that have to be overcome before you could do that. And I would love to be able to list companies like Polkadot.
Okay, so this next topic is something that kind of it doesn't sit right with me, Aaron, and I'll tell you what that is. So Coinbase, obviously. It's like Marmite Coinbase. You either love them or hate them. I really do feel that way. And personally, I'm in the I don't like them so much camp. And there's a reason for that. And that's because their customer service sucks. And I mean that with the strongest possible words I can use on a family-friendly broadcast, okay? If this wasn't family-friendly, boy, would I be unleashed. But let's be professional for a minute. Now, so let's go back to what I wanted to actually say to you, which is that, Coinbase, going off of what you were just saying about XRP and coming with a lot of baggage, and I mean in a bad sense, Coinbase, they paid a $6.5 million civil penalty to settle charges from the CFTC, which, by the way, stands for Commodity Futures Trading Commission for all the listeners. It was a whistleblower activity, from what I understand, brought this to the CFTC's attention because they reported these improper trading activities, and these violations were obviously held by the CFTC because they were penalized, like we just said, for $6.5 million, and they were delivering these false, misleading, inaccurate reports concerning transactions in their asset base, including Bitcoin on their GDAX platform. So they're very much involved, as you know, with Circle. They have the USDC coin. So it seems like every major cryptocurrency now has some tinge of something it just doesn't smell right with a lot of these. But if we were to use the same litmus test as we just did on Ripple, and then we did this to Coinbase, I mean, we could probably go around painting all of these different projects. I mean, that's a pretty big deal what Coinbase were charged with. And the fact they were still allowed to list, I'm very confused about that one. I don't know, maybe you want to help me out and sort my brain out on that one.
So what I took away from what you said is essentially that there's not investor protections and there's not fair and orderly markets. Mm-hmm. You're talking about the securities laws. And essentially, I think the way we're going is that the securities laws or frameworks are going to govern activities of virtual currency exchanges. The issue is that the money service bureaus, the money transmitter licensure, like the government force behind that isn't really in an appropriate spot to regulate markets. It was never seen as that before. Mm-hmm. And essentially, when you look at who is the most appropriate to regulate markets, it's the entity that's always done it. It's the SEC. And I think you might see, and obviously you can't predict the future, but I think you might see digital assets as a whole come under the regulation of securities. And people are like, how can you do that? You could do it pretty easily. You literally just change the definition of a security. I think it's in the 33 Act to include digital assets. And then you describe what digital assets are. And then all of a sudden, digital assets are regulated by the SEC. In order for digital assets to go mainstream and for people and major institutions to participate, you can't have these type of issues. I actually have a friend, and I'm not going to say his name, but he got locked out of his account recently. Mm-hmm. And it took him significant amount of time. I'm talking about a disturbing amount of time to actually get access to his account again. And if you're in a brokerage infrastructure and a client calls and you don't deal with their complaint, that's a regulatory matter. You'll have a FINRA arbitration. You can't do that. It's just that the regulatory enforcement framework is not there under their current licensing regime to basically ensure that investors are protected, ensure people have their complaints answered. I mean, I believe that there was also some sort of class action account about people who had complaints in California against Coinbase. It was a long time ago, I believe, but basically that was another issue in that people had customer complaints. And there's really the federal securities laws are a much better framework, and basically FINRA rules are a much better, and procedures are a better framework by which to ensure that customers' complaints are dealt with, ensure that markets operate orderly, ensure that investors are protected, basically ensure what the federal securities laws are supposed to do. And that's why we've always thought, and luckily our position is becoming more validated, in that the federal securities laws provide the best framework by which to regulate digital assets.
I do agree with that. I do think that in terms of what's going to be going on with the SEC, I do also, and I think I've even said it on more than one podcast, I do think that they're going to end up classifying all crypto as securities. Is there anything else that you want to add about Prometheum, about why anyone should want to be on your platform as opposed to anyone else's?
I think that the people will want to be on Prometheum's platform because it'll be the first time that they can invest through their brokerage account. It's their normal means of investing, and they'll have access to digital assets through that. In terms of what about Prometheum that's important here is that I would look at how, as I mentioned before, the CBOE started. This is not going to be rocking and rolling day one, but as time goes on, you're going to be able to add more assets, do your own issuance, and basically move forward with the process. And what you'll be able to do as time goes on is really build a big force and build a compliant ecosystem for the public trading of digital assets, which I think is really what's required in order for the digital assets to go mainstream. So we're very excited for the coming months.
Well, and that is exciting. So I guess a couple of things I'd want to say out of that. So like, for instance, Grayscale, which I've talked about in length in other podcasts, they put quite a hefty markup on crypto, which people could go out and just buy themselves, and they can purchase them themselves. And it's kind of outrageous, to be quite frank with you, these extra fees that are put on cryptocurrencies, which, again, it comes down to education. Anyone can go on to any of, either they can buy them, from the crypto exchanges, or they can go and even buy them from some crypto ATMs, or they can go and buy them, if it's an ICO, directly from the actual company themselves. But what kind of a markup as such is there on your platform if somebody wants to buy on your platform as opposed to, let's say, Binance?
Interesting. Binance, which has arguably the lowest fees, right?
Mm-hmm. Yeah.
We would obviously strive to be competitive with Binance. I think that there's a real opportunity coming, and it's not fully materialized yet in regards to commissionless crypto trading. If you look at every platform now, all of them charge fees, and arguably the fees are high. And there's different ways of, it's not passing on those fees, because you start to sound like people are trading ahead and you're the Citadel Robinhood model. You're not going for that. But the idea is to be able to keep the fees as low possible in order to attract the public and allow people to be involved. I think that for us, when you think about our alternative trading system, it operates similar to how NASDAQ would operate, is that there's a per share fee. And I think for us, our goal is to have more activity occur on the ATS, more assets listed, and really be able to keep the fees as low as possible.
Aaron, it's been a real pleasure to have you on Crypto and Blockchain Talk. I mean, it's been a very interesting conversation. I really, really wish you all the best for success. I will be using your platform. I'm going to be testing it out, and God help you if it's not good, because I will be tongue lashing it on my podcast.
As long as you'll also support it when you have a nice time, we got a deal.
I will always support you. Honestly, your platform does look amazing. So again, thanks for coming on.
Thank you so much, Aviva. Really appreciate your time and the opportunity.
Hey, no worries. I would like to thank everyone for listening and tuning into this week's Crypto and Blockchain Talk. Please remind yourself to tell your friends and family to download this podcast and many others on cryptoandblockchaintalk.com. There's a list of all the podcasting platforms where this podcast can be downloaded. And if you can't find it, because we're listed now on so many of them, it's over 70, just go to Google or your search engine of choice, type in Crypto and Blockchain Talk. No doubt the one in your country or area will come up. In addition, this podcast will be broadcast on our sister radio station, Crypto 24 Radio. That's crypto24radio.com, playing around the world 24 hours a day, 7 days a week, 365 days a year. Furthermore, we love to hear from you, and whether it's on our social media platforms of Twitter, Facebook, or Instagram, you are most likely to get the best response from us by emailing us directly. We will get back to you. So our email address is education@savvydigital. That's education@savvy, S-A-V-I-I, digital.com. Again, thank you for tuning in to us. We know that you have a huge number of choices that you can tune into. So when you listen to us, we truly appreciate it. So please be safe, take care, and goodbye for now.